Some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because your stock goes down, you shouldn't own a stock at all.
No, I mean, what are dumb things? Selling a stock because it goes down?
Selling a stock because it goes down. I mean, if you buy your house at $20,000 and somebody comes along next day and says, I'll pay you 15, you don't sell it because the quote's 15. You look at the house or whatever it may be. Some people are not actually emotionally or psychologically fit to own stocks, but I think more of them would be if you get educated on what you're really buying, which is part of a business.
So this time I went back actually to 1942 when I bought my first stock as an illustration of all the things that have happened since 1942. We've had 14 presidents, 7 Republicans, 7 Democrats. We've had world wars. We had 9/11. We had the Cuban Missile Crisis. We have all kinds of things. The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund. Never look at a headline. Never think about stocks anymore. Just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amounted to, and it would come to $51 million now. And the only thing you had to really believe in then is that America would win the war and that America would progress as it has ever since 1776. And that American business, if America moved forward, American business would move forward. You didn't have to worry about what stock to buy. You didn't have to worry what day to get in and out. You didn't know the Federal Reserve would exist, whatever it might be. And America works.
So I would pick a broad index, but I wouldn't toss a chunk in at any one time. I would do it over a period of time because the very nature of index funds is that you are saying, I think America's business is going to do reasonably well over a long period of time, but I don't know enough to pick the winners and I don't know enough to pick the winning times. There's nothing wrong with that. I don't know enough to pick the winning times. Occasionally, I think I know enough to pick a winner, but not very often. And I certainly can't pick winners by going down through the whole list and saying this is a winner and this isn't, and so on. So the important thing to do, if you have an overall feeling that business is a reasonable place to have your money over a long period of time, is to invest over a long period of time and not make any bet implicitly by putting a big chunk in at a given time.
My first question would be, what should I invest in next? Can I have some tips?
I think somebody like LeBron, and we've talked about it, but I think...
You and LeBron have talked about it?
Occasionally. I think actually if through the rest of his career and beyond in terms of earning power then, just making monthly investments in a low-cost index fund makes a lot of sense. I think that somebody in his position ought to have a significant cash reserve and whatever makes them comfortable. And then beyond that, owning a piece of America, a diversified piece, bought over time, held for 30 or 40 years, it's bound to do well. And the income will go up over the years, and there's really nothing to worry about. I bought a book in 1949 by a fellow named Ben Graham called The Intelligent Investor. I don't remember what I paid, but aside from what I paid for my 2 marriage licenses, that was the best investment I ever made. And it's very important to have the right framework. You need to have an approach to investing that's sound. And Graham's approach is simple, but some people adopt to it, which I did immediately, and most people don't. But if you have the right philosophy, you will find opportunities as you go through the next 20, 30, 40, 50 years. And frankly, you're most likely to find them in periods like 5 years ago when we were having the panic. I mean, stocks sell at silly prices from time to time. Most stocks at one time or another sell at very silly prices. It doesn't take a high IQ to figure out that they're cheap, but it does take a temperament that's willing to step up and actually act. I tell people, if they're going in the investment business, if you got 160 IQ, sell 30 points to somebody else because you won't need it. I figured out very early, you don't have to be that smart in this business, which is fortunate, but you do have to have the right temperament, and you have to be able to ignore what other people are saying and simply look at the facts and decide, is this stock which is selling at X worth 2X? And occasionally you'll find things like that. And when you don't find them, you don't do anything. So that's my generalized stock tip, no names.
We will never buy anything we don't think we understand. And our definition of understanding is thinking that we have a reasonable probability of being able to assess where the business will be in 10 years. But, we'd be delighted. We have a man here who's done very well, and if he has any business cards, you can always invest with him, and we'd welcome. We'll give you a booth in our exhibitor section, and anybody that wants to do that, perfectly obviously free to do it with you or through anybody else that they select. Now, you have a whole bunch of people out there that say they can do this, and maybe they can and maybe they can't, and maybe you can spot which ones can and can't. The only way we know how to make money is to try and evaluate businesses. And if we can't evaluate a carbon steel company, we don't buy it. It doesn't mean it isn't a good buy. It doesn't mean it isn't selling for a fraction of its worth. It just means we don't know how to evaluate it. You know, if we can't evaluate the sensibilities of putting in a chemical plant or something in Brazil, we don't do it. If somebody else knows how to do it, more power to them. There are all kinds of people that know how to make money in ways that we don't. But it's a free world, and everybody can invest in those sort of things. But they would be making a mistake, a big mistake, to do it through us. I mean, why pick a couple of guys like Charlie and me to do something like that with, when you can pick all kinds of other people that say they know how to do it? I would say this, incidentally. You mentioned a point earlier, which is how the popular press tends to think of things, but we don't consider ourselves, Charlie and I don't, richer or poor based on what the stock does. We do feel richer or poor based on what the business does. So we look at the business as to how much we're worth, and we do not look at the stock price, because the stock price doesn't mean a thing to us. I mean, it doesn't for a variety of reasons, but beyond that, imagine trying to sell hundreds of thousands of shares at the stock price. We can always sell the business. We're not going to do it, but we can always sell it for what the business is worth. We can't sell our stock for necessarily what the stock price is. So we look at the business entirely as in terms of evaluating our net worth. We figure our net worth went up very, very slightly in 1999. And we would figure that no matter what the stock was selling for. It just doesn't make any difference, because we do look at the businesses. We really look at it as if there wasn't any quote on the stock, because we don't know what the stock is going to do. If the business gets worth more at a reasonable rate, the stock will follow over time. But it won't necessarily follow week by week or month by month or year by year. We had a lousy year in 1999, but the stock price did not calibrate with that in any perfect or close to perfect manner. And we've had good years other times when the stock price is way overpriced, overdescribed what happened during the year. So we really measure it all the time by the business. We think of it as a private business, basically, for which there's a quotation, and if it's handy to use that quotation, either in buying more stock or something of the sort, we may do it, but it does not govern our ideas of value. Charlie?
Yeah, generally, I would say that if you have a lot of lovely wealth in a form that makes you comfortable, and somebody down the street has found a way to make money a lot faster in a way you don't understand, you should not be made miserable by that process. There are worse things in life than being left behind in possession of a lot of lovely money.
Would you want to name a couple? No, Charlie, I mean, when farmland farmland probably tripled here in the late 70s without any real change in yields per acre or the price of the commodity. Are we going to sit around and stew because we didn't buy farmland at the start? Are we going to stew because all kinds of uranium stocks in the 50s, or you can go back at all kinds of things that the conglomerates in the late 60s, the leasing companies. I mean, you can just go down the line, and it just doesn't make any. We're not in that game. We would know how to create a chain letter, believe me. I mean, we've seen it done so many times. We know the game, but it just isn't our game.